Tesla is worth $50, not 1,000. Guys, we all know Tesla is overvalued, so I'm just gonna skip to my second metric and have a quick look. Look at this revenue growth. Double digits crazy. These are stocks you want to pay premium for. But is it 20 times like here? Out of this world numbers. But again guys, what are we really paying for a stock? Is it the revenues? Is it the growth? Or is it the money they're making? For context, the idea of this metric is we want to pay a dollar or less for 1% of the money they're making. Meaning, we want to pay 1 PE or less for 1% of their margins. I use the highest yield here of 10.25 to divide the current PE, and we'd get a premium of 19.78. We're basically paying 20 times their highest margins if we buy the stock at the current price. Let's skip to summary. Based or not on these metrics, Tesla is overvalued. I don't own the stock. It's sensible to pay premium for the stock. Is it 20 times their yields or margins? I don't know. Well, the market thinks so. My fair value of the stock is $50. This is when you multiply the EPS, my first metric, to my second metric. The yield, if we equate this to PE. $50. That's not paying for a premium, guys. Just $50. Normally, for auto companies, you want to enter the stock at very conservative PEs because they have very little margins. I put here PE assumptions like I would for Ford and GM. 456. 456 is value play already. Normally, I'd use these multiples for EPS growth, 1.25, 1.5, 175. But obviously, it's not going to work for Tesla because this is clearly overvalued. But I'm buying. I want to buy the stock. Maybe fractional, time by time. Even when they split, I'd only be buying fractional. I won't be loading a lot of money in one buy. You know what I mean? Some people would short this. I wouldn't. I wouldn't bet against Elon. I'd rather stay away and ignore this, but I'm taking the risk of putting money on this. Just not at the current prices, of course. We have to point out some things here. First, it's really hard to put value on Tesla. I think it's the future. It's more like a movement, like a meme stock, but a serious one. Second, if you're thinking of buying the stock at these levels, you have to understand that this is a very risky play. You might lose a lot of money. And this might not be a long-term play. This is a trader's play. At the current valuation, this is way too inflated that early buyers could just dump shares on you after hours while you're sleeping. This could very well be a bubble. We've seen this stock price movements before. It happens, and it might happen to Tesla. It happened to Ford before and the dotcom. It happened to PayPal. There are consequences for high-flying growth stocks like this. This is a Cathy Wood stock after all. Let's just say I understand both bullish and bearish case of Tesla. And I'm joining this movement.